Hi, everybody, and welcome to the Policybazaar.ae live session. I'm your host, Joe Mohan, and today we're diving into something Gen Z really needs to talk about: money, adulting, and making smart financial moves. And no, this won't be a boring finance lecture. We're keeping it absolutely real, relatable, and rooted in what Gen Z actually cares about. Freedom, flexibility, future proofing your wallet. So these are the three F's that Gen Zs really are taking care of. Now, joining us live today is someone who's worked very closely with young professionals, freelancers, and especially first time policyholders, and that is CA Anamika Rana. CA by profession, she's also a social media content creator and an influencer. So, Anamika, welcome to the session.
Thanks, Joe. I'm really happy to be here, and it's honestly refreshing to speak with the Gen Z about this topic because I see so many young minds trying to make smart moves with their finances, with their money management, but still they miss out on some most key important key factors, which kind of hold them back from building the real long-term wealth. And I'm really thrilled to be able to share some tips and tricks around how they can fix that. So thank you once again.
Absolutely. The pleasure is ours. And the people who are watching this are definitely going to appreciate what you're going to share today. And I'm really hoping that they can actually implement this in their lives as well. So, it's honestly very refreshing to talk about Gen Z because this is, I see so many youngsters, young people around us, they're just trying to make this smart move with their finances, but they're kind of missing out on certain key pointers, which could probably hold them back from really building that real wealth. And I'm really excited and thrilled that you are here to share how they can fix that, right? So
Absolutely.
yeah, and then right in the beginning, let's talk about the mindset shift. And I'm going to actually share with you a few questions which the youngsters around us have shared, or you can see that people have these questions in their mind, especially the young professionals, when they start earning, maybe with a new business or maybe with their first jobs. Yeah. Question one could be, why is investing better than just saving? And this is a contradiction to what people used to think earlier. Yeah, when we were growing up, being a millennial, I would say saving is what I've heard. But why is investing now better than just saving?
So, like you mentioned, Joe, that in our generation, the concept of saving was always given more importance. But now, as we proceed ahead, we realize that saving is good, but investment is way better. And the simple logic is that there's a concept called inflation, which is the reason behind why investing is always preferred over savings.
Hmm.
So, to give you an example, if you look back, say 5 years ago, a loaf of bread or say a bottle of milk, or any daily essential commodity, for example, the price 5 years ago and the price today is not the same.
True.
And the simple reason is because of the concept of inflation, right?
Hmm.
Now imagine if you just keep saving your money. If you say saved 1,000 dirhams, say 5 years back, do you think with inflation, going on, you think the 1,000 dirham will be the same value today as well? Of
No.
course not. It probably would be, like depreciated. And this
Hmm.
is why it is important to not just save, it is important to invest so
Hmm.
that you not only beat the inflation, but also you are able to generate some extra returns.
Hmm.
So this is why investing is always preferred over savings.
Very well put. Absolutely. And this is something which is relatable. We are seeing this. In fact, a few years onwards, back, if you refer. Yeah. Question number two is, when someone receives their first salary, what's
Mhm.
the smartest way to start managing it? I mean, should they focus on the saving bit of it, or maybe something like building an emergency fund, or planning long term? What do you think?
All right. So I'll go back to when I received my first salary. I always follow this simple three-step approach, which is number one is always, like you mentioned, focus on the emergency fund, right?
Hmm.
And the percentage that you want to allocate to this fund is variable, but
Hmm.
usually the emergency fund as a concept is around 3 to 6 months of your essential expenses. So
Hmm.
for instance, say your essential expenses are say 5,000 dirhams every month, so
Hmm.
ideally, the amount in your emergency fund should be around 3 to 6 times of that, which is 15 to 30,000 dirhams of the emergency fund, right? Now, after that, depending on what your expenses are, you can follow any kind of budgeting rule. The most common one is the 50-30-20 budgeting rule, where 50% of your salary can go towards your essential expenses, 30% towards your needs, and 20% towards your savings. Okay, and from the 20% savings that you have, you can then start doing something like an SIP, or like something like a ULIP, for example, because it will not just help you to save money, but also instill a sense of consistent discipline over time. So
Hmm.
once again, emergency fund, budgeting rule, and then start saving as well.
Interesting. Well, actually, you've also very nicely touched upon the emergency fund, especially looking at a city like this, Dubai, which is expensive, high cost city. So you're saying about 3 to 6 months of your essential outflow should be considered as an emergency fund,
That's right.
right? So let's say my salary is 5,000.
Mhm.
Anywhere between 15 to 30 is a safe figure.
Yeah. So essentially, say your salary is supposed to 10,000 dirhams per month, right?
Hmm.
Now, from the 10,000 dirhams per month, you have your fixed expenses like your rent, your groceries, your water bill, your any mandatory expense which you have
Ah,
to
yes.
incur,
Okay. So that
right?
figure and multiple of that. Okay.
So that fixed expense which is not negotiable, which you
Hmm.
have to spend to sustain your life over here,
Hmm.
that figure into 3 to 6 times. So if that figure is 5,000, for example, then the amount in the emergency fund should be 3x or 6x, a range of 3 to 6x. So
Understood.
15 to 30,000 dirham should be your emergency fund.
Okay, so that could include rent, telecom, food, EMI, or whatever is.
Yeah, the most important essential expenses, not like going out for brunch on a Sunday, or going to JBR or something like that. The fixed expenses, which are like not negotiable.
So I think it's also important for people to understand the difference between the need and want.
Yeah, that's what. Yeah,
And the need, even before the need comes the essential, non-negotiable expense. There's an added category there. So
absolutely. Yes. Yeah.
have a look at that. So you've
Yeah.
already touched upon the 50-30-20 rule, which is great. So are these only relevant to people in the 20s, or is it also better, if there is a better way to structure it even for the ones who are slightly above the age bracket of 20?
So, see, Joe, how I see it, that 50-30-20 is a very basic rule, but it's a great rule to start with, especially if you're someone, who literally is clueless about how to start planning your finances. This is one of the most common and the best rules, because it simplifies your money management. You know,
Okay.
that
Okay.
50% has to go towards your essential expenses,
Yes.
30% towards your wants, and then 20% towards your savings. And
Got
then
it.
where you want to save, where you want to invest is a personal call that you eventually decide.
Perfect. So this rule 50-30-20 actually applies to everybody, not just people in their 20s. So anyone, anytime can apply this.
Anyone. Yeah,
And
absolutely.
on a
But
safer
but
side.
but but over here, I want to, of course, mention one more point, Joe, is that, like, say if you are living in an apartment with your family, or you are living rent free, then of course the 50% should not be 50%, because your major expense has come down, right?
Of
So it
course.
is customizable based on your requirements, but in as a generic rule to start with,
Hmm.
this is a fantastic rule, I believe in.
Perfect. Interesting. That sounds doable and easy to implement, actually, right to begin with. Now, you mentioned about ULIP, so unit
Yes.
linked insurance plans in an expanded form. So, how does it really help the first time investors stay consistent?
All right. So unit-linked insurance plans, I think, are a great option for those who want to start investing and
Hmm.
also want to stay consistent from a long-term perspective.
Hmm.
Because ULIPs not just allow you to invest, but also they offer, I would say, an exposure towards your insurance aspect. Okay, and for example, if you feel like you are someone who probably has a tendency to like stop to withdraw from investing every month, then ULIPs are, I think, a great tool to start with, because it allows you to stay consistent and disciplined over a long term, because they have a long term lock in period over here, right? So I
Got it.
think, and especially given the long term perspective, they have also a good return, like around 8%. So I think that personally, I feel it's a great tool to resort to from a diversification point of view.
Got it. Understood. So even though you said 8%, that's a normal, I would say an
That's a
average.
rough
Say,
figure.
you
Yeah,
know,
yeah.
it could
Please
also
don't
be
quote me on this.
better
Yeah,
because it could also be
absolutely.
better, or it depends on the market. So
Depends. Yeah.
a question for you is, ULIP, do you think could offer better returns when we compare this with the traditional fixed deposit, FD? Just do an FD, or savings, do a savings plan or something. What do you think?
Right. So, see, FDs are great, but ULIPs are better if you look at the time horizon.
Hmm.
So, fixed deposits are good, say from a short-term perspective,
Hmm.
but ULIPs are better from a long-term perspective because, like I earlier mentioned, Joe, that it instills the long-term investing, the long-term consistent discipline, habit of investing every month. So,
Hmm.
I personally feel, of course, it is market linked. It depends on how the market is performing, but in
Yeah.
the long term, usually, if you start investing today, say 10 years, 15 years later, it will eventually grow and give you much better returns as compared to a fixed deposit, which has a fixed rate of return.
Understood. And also, I feel unit linked insurance plan. So there's an insurance element to it. So there's not
Exactly.
about money
You're not
saved.
just investing, you're also insuring yourself in a way. Yes.
That's definitely a good angle to that. Lovely. And when you also mentioned about SIP, so which is strategic investment plan. So,
Mhm.
um, I mean, does it fit for anybody? I mean, earning any amount of salary in the UAE, or is it a specific kind of salary that you should earn to go into SIPs?
No, it is. So see, SIP is something, Joe, everybody, irrespective of your salary, everybody should start with. And of course, like depending on how much you are earning every month, or, whether your income is regular or irregular, you should definitely start with a bare minimum amount,
Okay.
For example,
Okay.
even if say you are earning say, 10,000 dirhams a month or say 5,000 dirhams a month, does not matter. Even if you are investing, say, 500 dirhams or 200 dirhams per month, you look at the long term compounding effect, and that adds up to a lot of wealth. So that's why SIP is really important. And no matter what your earning background is, you should start SIP today, like right now.
All right. So you're saying SIP to begin with, there is no time restriction. You can just start off with at any time, no salary restriction.
Anytime.
Even if your salary is as low as, let's say, 1,000 dirhams, you can still start saving, say, 100 or 200 or whatever.
Absolutely. That's the
And
best part about SIPs.
that this is also long term, or is there a lock period usually, or how is it?
It depends on the plan, Joe. There are a lot of plans under SIP category. It depends on which plan you're opting for.
Okay.
So depending on the plan, the lock-in period, if at all exists, it varies. Some SIPs have a lock-in period, some don't. So it depends on which one you're opting for.
Interesting. Lovely. So I'm sure people should start doing SIPs while they also maybe look into the options of ULIPs if they want to insure themselves and so on. Because I think SIP
Absolutely.
doesn't come with an insurance per se; it just is a savings plan. ULIP has an insurance angle to it, which where you protect your health or your wealth.
Absolutely. Absolutely, you're right.
All right, lovely. So, and since most of us, I mean, both of us are Indians, and definitely we are in UAE, and whoever is watching here, I want to build in a small comparison between the considerations, rather, between UAE and India. A lot of Gen Z earners here in the UAE, they also have their financial ties to India. So, should
Mhm.
they be investing locally here, excuse me, or exploring a plan that is let's say 80/USD based growth sort of a plan? What do you think?
Okay, that's a tough question because, okay, so there are two angles how I
Mm,
personally look at it. Okay, one is the emotional angle,
mm,
and one is a practical angle, right? Where we look at the stats and the numbers because numbers don't lie, right?
mm,
Emotional angle is, you want to send money back to your country, you want to support your family, you want to build a home back in your home country, stuff like that, right? Now, for
mm,
those reasons, of course, you might want to consider investing back in your home country, right? But the practical and the stat backed angle is that if you look at the data over the last 20 years, almost 2 decades, Joe, uh,
yeah,
INR has depreciated by almost 80%. And
correct.
that's a huge number. Versus if you look at, say, dirhams as a currency, AED, it is pegged to US dollars, you
Yeah.
know. at around 3.67 approximately, right? And there is a very low percentage of fluctuation in this conversion ratio. So
Right.
as a result of that, basically, I always suggest that you should always look at the practical angle and focus on investing in dirhams or USD, but emotional angle INR maybe.
So now you've given the option of both the angles. So I think people could choose based on whatever is more important for them. Um, uh, Also for expats living in the UAE, I mean, it is important to diversify. But is it really important to diversify across currencies like AED and USD, or is there a different thought process to that?
See, like I said, it's pegged like AED is pegged to US dollars, right? Yeah. So it doesn't really change like make a lot of difference. But of course, when you compare it to say INR, then of course there's a massive change, right?
Yes.
So whether you want to invest in like USD or AED, it's fine. It's a personal call. But if
Hmm.
you invest in INR versus then AED or USD, then that's something where you have to look at the stats as well. So I would say, it's more like, like a mixed combination of your heart plus your logic.
Got it. Got it. Perfect. Lovely. So now talking about long-term strategy or let's say protection, I mean, how can the young investors start building a solid corpus today for goals like really far off, like home, having a family, or early financial freedom, or something of that sort?
Right, right. That's a very interesting question, Joe. And I personally always use this approach for, all my goals. So,
Hmm.
goals can vary for every person, whether you have like a short-term goal or you have a medium or long-term goal, right? Usually
Hmm.
long-term goals are like 5 years, 7 years, 10 years down the line.
Yeah.
Short-term are like, within a year or something. And medium terms are like, like a year to like say 3 years, something like that. Let's
Yeah.
give you an example. For example, you have a goal where you want to buy a car worth say 100,000 dirhams after 3 years, okay, which is approximately 36 months from now. Okay,
Yeah.
now you do the basic mathematics. We don't see inflation over here. We'll just do the bare maths over here, a bit of calculations over here. Okay, so say 100,000 dirhams you need after 36 months, which essentially means that every month you need to start saving approximately 2,800 dirhams per month, right? Now,
Correct.
if you keep saving that much amount every month for the next 3 years, you will end up reaching your 100k dirhams, savings mark. Now, if you not just save, like the first question we had discussed, savings versus
Yeah.
investment, you
Hmm.
don't just save, but you start investing that 2,800 dirhams, in a moderate risk, investment tool, investment option, for example, which gives you like 6 to 7% returns. Also, you are
Hmm.
actually saving more than 100k dirhams after 3 years.
Hmm. Got it.
Right. So that is usually how you should do any kind of goal planning, whether you want to buy, say, an iPhone after 6 months, or you want to buy a car after 2 years, or you want to save for the down payment of your first house, say, after 2 years. Always do this backward calculation, like the
Understood.
goal number divided by the number of months, and start looking at, that amount you have to save. And if you invest that amount, you actually save more.
Understood. Understood. Okay.
Sorry, a bit of extra math over here. Apologies for
No, no, but
that.
that's a very simple formula. I mean, whatever is your target, X figure divided
Exactly.
by a certain number of months that's leading to it. So
Absolutely.
interesting. Now I have a question here. So everyone here in UAE who is employed at a company, by rule, by policy, I would say, needs to have sort of an employer provided health insurance, right? So when everyone is insured, when does it really make sense for them to get an additional life or critical illness cover?
In my personal opinion, Joe, right from day one,
Mm-hmm.
because like you mentioned, see, the insurance cover we get from our employer is like an add-on. It's like a bonus.
Mm.
But suppose, say, after 2 years, after 3 years, after 5 years, you decide you want to quit this job, or you want to quit the corporate, cycle, and you want to pursue your own freelancing journey. You know,
Mm. Mm.
then in that case, 5 years later, if you end up buying an insurance plan, the premium will be way more higher versus what it was 5 years ago because you were younger that time.
Yes.
Right. So, right from day one, or even if you haven't done, start it today, as soon as possible. Always have your own insurance plan, irrespective of whether or not your employer is giving you one.
Got it. Got it.
And like you
Interesting.
mentioned about the critical illness cover, always go for it because again, life is unpredictable. It's always better to have a bonus cover on top of it.
Also, I feel there's another angle to it, right? So most of the employers, I'm assuming here, also it's based on what my interactions are with people around me. They provide you a basic cover, something which is bare minimum, which is basic, which is required for everybody. It's a group policy, but it may not probably give me the sufficient safety net that is per se needed, when it comes to whether it's critical illness or additional sort of a coverage or any sort of benefits, which there are so many benefits which come with the insurance package. So I think for that I could have an additional, a parallel insurance policy, which is mine, which I'm paying for, which is taking care of
Absolutely, absolutely,
more
you're
than
right.
what employer is providing. Yeah.
Absolutely, Joe. Yeah.
Okay, good. So we have a few questions. Now, these are the
Hmm.
questions from the people who follow us, the audiences, and so on. Right now, the questions that we have from the audiences are first one is for freelancers and gig workers, who are literally not having a regular salary or income. They are, it's
Hmm.
up and down. How can they
Hmm.
still invest smartly without risking their liquidity?
Interesting. So, for anyone who doesn't have a regular, consistent, stable income on a monthly basis, think of it like this. You do pay an X amount as your rent, right? Now, how do you decide how much rent you want to sign up for? You take a rough estimate of this is the bare minimum I should be earning,
Hmm.
irrespective of whether I'm earning each month or not, right?
Right.
Now
Yes.
how much you want to invest in an SIP, for example, is also something. It's a personal decision, but I
Hmm.
personally would suggest that don't go overboard. Like
Hmm.
don't be too so excited. So for example, say as a freelancer, there will be months you earn say 5,000 dirhams a month. There will be months you earn 50,000 dirhams a month, right? So the calculation of how much you want to invest per month should not be based on the 50,000 benchmark. It should
Hmm.
be an average, or I would say below average amount of the
Both
extreme
the various.
variations. Yes,
Got it.
absolutely. So,
Hmm.
and the best part is, like I said, Joe, this is not something that you have to, like, it's not like you are committed to it. You can always vary this amount. Say you start with 2,000 dirhams a month, but after say 6 months, you feel, oh, my work is picking up. I think I can do more than 2,000 dirhams a month, right? You can, of course, increase the amount. So that's just my personal approach towards it. Start small, but stay consistent.
Hmm. Interesting. So, make hay when the sun shines, as they say. When
Absolutely.
the
Yeah.
sun is shining, the market is good, and you're getting some really good gigs. Put away a little bit more towards your own
Always.
safety
Yeah.
for your own insurances or whatever. And then, when the market is low, you still are committed to that figure that you've decided. Okay.
Absolutely.
So, another one. This is a good one. I'm planning to retire by 40. How can I make my corpus grow for the same?
Very interesting. 40 is a very ambitious, aggressive number. I wish I could say the same for myself, but jokes apart.
But they say 40 is the
Uh,
new 30, right?
Actually, yeah, Gen
Yeah.
Z. So yeah, but great goal. So see whether your goal is 40 or 45 or 35 does not matter. There's
Hmm.
something called fire, the fire number, right? Which usually it's a tentative amount which you calculate based on the number of years of your life expectancy from the retirement age. So, for
Okay.
example, if your retirement age is say 40, right, and you think that if I am able to, after 40, if I'm able to get 10,000 dirhams per month for the
Hmm.
next say 25 years of my life, I am sorted, I am settled, right? So you do the math over there, and you decide, say I need 3 million dirham at the age of 40 in my bank account, so that I am able to withdraw say 10,000 dirhams every month for the next say say x number of months, you know
Hmm.
till the time you think your life expectancy is able to stretch you, basically.
Hmm.
So you decide on the fire number. Now it is not mandatory that it has to be like 3 million or 25 years. It's a rough calculation, Joe, because
Hmm.
say after 40, it's not that you're going to sit at home and do nothing. You might just do some small hustle here and there out of passion, but not out of compulsion, right?
True.
So have a rough estimate in your mind that if I have suppose say 10,000 dirhams or 15,000 dirhams a month,
Mm,
I will be able to survive the next 20 years of my life.
got it.
And
Yeah.
that number into the number of years you're looking at after retirement, you multiply that, and you start focusing on building a corpus of that kind of amount.
Hmm. Okay. Okay. Now that definitely needs a lot of calculation.
It
Someone
does. It does. Fire number is not very like a second word, but it requires a bit of calculation here and there. You have to also consider factors like inflation,
yeah.
because say 40 years and then 20 years after 60 years, the inflation will be there.
Okay.
So you
Okay.
have to do a lot of math over here. But it's just a rough approach, which
It's
I'm
somewhere to begin with, basically.
exactly, exactly. Like how do I know whether I am whether at the age of 40, 1 million dirham is enough or 2 million is enough? How do I know that? It all starts from the basic point of how much amount is the bare minimum which I need every month to sustain my life if I don't work.
Understood. Understood. Okay. So I've got another question here, which is, do we really need a term insurance at the age of 25?
Wow, at the age of 25, see, like I said, it's never too early or too late to
Mm,
start with a term insurance or any kind of insurance plan for that matter, because essentially what you're doing is you're trying to protect your uncertainty of life essentially over here, right? The
mm.
sooner you begin with, the better it is, because the later you do it, the premium goes up, so it becomes like a liability on you versus like an asset.
So are
So
you saying that, let's say I am 25 years of age, I
mm-hmm,
start, or I take a term insurance, I start paying a certain amount of money.
mm-hmm.
Does my premium remain sort of in the lower end or low bracket, even though I'm aging through, let's say I've crossed 30, 35, versus I start term insurance at the age of 35?
Of course, yes. So see, Joe, usually what happens is like it's a very logical calculation. See, at
Mm,
the age of 25, you are younger, you're fit, you're healthy, the chances of falling sick or
mm,
availing the insurance is lower, the
mm,
probability, right? Versus say at the age of 35, you know, where the chances are higher. So of
mm,
course, that is based on that, the insurance, the premium the insurance premium is kind of calculated. So the later you start, the more premium you will have to pay versus if you start early. So that's why a lot of like young professionals nowadays, before they start saving for an emergency fund, they also prefer first signing up for an insurance plan.
or an insurance plan.
Yes,
Absolutely. Absolutely.
because we should not think of it like how we earlier discussed, Joe. We should not think of it like, oh, my employer is anyways giving it, I will not do it now. No,
Yes.
your employer is giving it, that's a bonus, but you mandate as a mandatory exercise, you need to take your own insurance plan as well.
Hmm. Got it. Got it. All right. So I've got this question here, which is, where should I invest my money? In UAE or my home country, India? Now, you mentioned earlier, you touched upon this saying it could be either. One is depending on your, where you're working. One is emotional connection. Is there a different answer to that?
The answer remains the same, the stats remain the same. So, but like I said, of course, it's a tough decision, because it's like, it's your home country versus, the country which is provide helping you, grow in life further ahead. So it's a tough decision, and it purely depends on why, the reason why you want to invest, right? Like a
Hmm.
lot of people, a lot of my clients, for example, a lot of people, I interact with, at a professional level, they have their own emotional reasons that they need to send the money back to their home, to their families, right, to support them. Now, or they want to build up a house back in their home country, or their their birth city, for example. Now,
Yeah.
you don't evaluate those decisions from a
Hmm.
statistics perspective. It's an emotional investment. But if you are someone who doesn't care about the emotions back in your hometown, then of course it's like a no-brainer decision. You have to go for a currency which is not depreciating, which is AED.
सो कर्म भूमि और मातृभूमि के बीच की जो वो है, this is most to do with it is to do with a personal decision, but whoever is working here would understand the currency is, it plays a very important role. So whatever currency is strong, I think is a safer bet. Okay, so what's the best way to invest small tiny amounts in the UAE? The answer is it connected to SIPs, or is there anything else beyond SIP also, which is smaller amounts?
So see, SIPs are best to start with. and like we discussed, SIP is the investment aspect. There's a proverb which says, "Don't put your eggs in one basket," right?
Yeah.
That's where the concept of diversification steps in. So say if I decide that today, from this month onwards, the moment I receive my salary in my bank account, on the same day I will set up an auto payment option for a debit of say 500 dirhams towards my investments, right? Now
Hmm.
in that 500 amount I can choose to split amongst three SIPs, like three
Okay.
different plans, or say
Hmm.
two SIPs and one ULIP, something
Hmm.
like that. So it purely depends on your long-term goals, your short-term goals, why you are
Hmm.
doing SIP. Like I said, SIPs are great if you don't have a long-term vision, but if you think that I want a long-term lock-in period and I don't want to break my pattern of investing, ULIPs are also a great option, which not just help you with investment, but also give the insurance aspect to it.
And safer bet is to do both, because
Yeah,
everyone has
absolutely.
a short-term
Diversify.
requirement. 1 or 2 years something happens, you need. But then of course there is a long-term plan also
Yeah,
tied.
absolutely, absolutely.
Interesting. So let's say we spoke about someone who's in their 20s. How
Mhm.
about what kind of insurance should they go for, or what types of insurance can they go for if they're in their 20s, early 20s, let's say?
Uh, so when you say what kind of insurance, as in,
Because there are so many kinds of insurances, and people who just got into a job, there is term
uh,
insurance, there's ULIP, there's SIP, then there's health insurance, there's life insurance.
mhm.
These terms could be a bit confusing, so
All
what do
right,
they?
okay. So of course, the technical explanation behind the type of insurances, maybe the insurance provider can explain better. But from a chartered accountant point of view, I always feel that start with a life insurance,
Hmm.
and like only after you have taken care of your life insurance first,
Can you
or your
repeat that once again? I just want to get the order right. So, are you
or
saying the first thing is get a life insurance proper?
Yeah, like your health insurance, basically, like the cover which your employer is providing, right?
Medical insurance.
Always medical insurance, or your health insurance, basically.
Yes.
Then you
Yes.
go for your term insurance after that.
Okay.
So that's just my approach. Of course, people can have different viewpoints on this, but my approach has always been, Joe, that first I have to cover up for my basic health insurance, because if what happens, God forbid, if tomorrow I fall sick and I have a huge medical bill outstanding, how do I pay
Right.
for that? So
Hmm.
I need to have a health insurance to cover for my medical expenses, and then term insurance. Once I feel okay, I have now spent like a year or two, in the corporate journey, and now I feel I have taken care of my SIPs and a basic emergency fund is shaping up. I can then also consider simultaneously going for term insurance as well.
Hmm.
But if you are earning like in abundance, then you can do all of it at once. So
Of course, I mean,
that's
that
a
would be
personal
dream come
choice.
true.
Yeah, that's a personal
That
call.
would be
Yeah,
dream.
but
Okay,
health
so
insurance
while
always
we're
is important.
while we're at this topic, could you, like in layman terms, differentiate between term insurance? So let's say medical insurance is only about the medical bills, pharmacy visits, and
Right,
doctor
right,
and
right.
all of that. So that is understood. Term insurance comes to play when it's life insurance, life as in death benefit and all that, right? So
Right,
term,
right, right.
ULIP, and any other kind.
Okay, so like you mentioned, like the health insurance, or the medical insurance is something, say God forbid, say tomorrow I fall sick and I have to, for whatever reason, get hospitalized, right?
Yeah.
Now I'll have a huge medical bill, at my doorstep. But if I have a good medical insurance or a health insurance, for example, depending on the terms and conditions and how much coverage they will give me, I can always get that reimbursed, right?
Okay.
That is
Hmm.
the health or the medical insurance, right? The term insurance is like what you mentioned, in some unforeseen circumstance, something happens to my life, something happens to me, right? At least my family is well taken care of, because I had a term insurance which I had signed up for, right? Now ULIP and SIP are very separate from insurance, from pure insurance plans. SIP is pure investment, where you decide that I want to instill a habit of disciplined, consistent savings
Hmm.
every month from my salary. Just like, how you pay, say, an X amount of rent every quarter or every month, depending on your plan. Just like that, you can start an SIP. Now you say that, okay, you know what, I am okay with SIP, but I also want to have an insurance aspect linked to it.
Mm,
Something which not just grows by money, but also gives me an insurance coverage. That
coverage.
is when ULIP steps in.
Mm,
So there's like very subtle difference in everything, with every option being like one additional layer on top of it. But like I said, Joe, if you are at, say, in your first 6 months of your journey or your first year as well, or irrespective of how much time you have spent, today you decide after this session that, okay, you know what, I'll take a control of my finances.
mm,
First thing you go in for, you check what kind of insurance, your medical insurance or your health insurance your employer is supporting you with,
yeah.
and then based on that you take your own insurance as well, and then simultaneously also start with an SIP or a ULIP depending on your long term or short term goals.
Okay, so just to summarize that, in layman terms, let's say um, medical insurance is of course just not taking care of life or death situations,
No,
just
no,
for
no, no.
so when it comes to term insurance, it's only an insurance where you're paying and it's giving you a guaranteed cover in the unlikely case of losing your life. But
Yes,
there's no investment element to it. And on the other hand, SIP is got no insurance connected to it. It is purely savings. And when both of
investment.
this
Yeah,
comes together, is ULIP,
exactly. Yeah.
right? And obviously, I think ULIPs would be a bit more expensive when it comes to when it's compared to term and SIP, or is
Uh,
a
it
different.
will it will be unfair if I say it's expensive or less expensive. I mean, it purely depends, Joe, on the insurance provider and which plan, the
Great.
timeline you're signing up for. Yeah,
I mean, in fact, I feel people who would really want to know about the the affordability factor and what covers and what are the benefits and what are the features that is covered in each plan. Policy Bazaar is the right platform to go for
of
because
course,
we have
right.
so many options there. So you just compare, and it's a
Exactly.
nice a tabular format of like comparison there, and get to choose what you really want. So let's look at the
Correct.
scenario. Let's say I've got 3,000 dirhams
Mm-hmm.
that I can set aside every month
Mm-hmm.
towards investments.
Okay.
um, it would be great if if we could maybe give them some ideas on how to invest this amount in the market, especially when it comes to insurance, and then they have investment options and all of that. How would you
Okay.
advise me to do it?
Okay. So over here, a very important aspect is the age factor. Say
Mm,
I'm in my early 20s or mid 20s, right? Then I can take it easy. Okay.
okay.
But I have like, to, to be on the optimistic side, I have a huge life, like a long life, ahead of me, right? So it's not like I have to invest, say, 80% of my money like today. I can decide to keep it like half, for example, right? But say
Mm,
now you are in your mid 30s, and you have like family responsibilities, and you feel that I have to get up my pace,
correct.
then in that case, you might want to go a little bit more aggressive with your investments.
Yeah.
Say you decide to go like for like say 70%, of 3,000 dirhams into your SIPs, for example. Now you are in your 50s, okay, where you feel that, okay, I want to be more aggressive, but at the same time I also know that maybe I have like say 15, 20 years ahead of me, right? So
Mm,
what's the point of just saving an investment, right? So in those cases your goals changes, right?
mm,
So the percentage, how you want to split that 3,000 is a personal decision that you have to take depending on your age group, for example, the family responsibilities. Now, for example, you are in your 20s, but you have a lot of family responsibilities. Say you have to help your family to repay a loan, you
yeah.
know
Mm,
in
mm,
that case you might want to save up, invest more, so that you are able to help your family pay up the loan faster. So again, it's that is where like I would say like professional planners step in, right, to help you sit down with your goals and then to evaluate the market, your needs, and then help you decide this is the plan you should go in for. And like we mentioned, Policy Bazaar, is a great platform to help you connect with the right kind of professionals.
true, and so many options as well. Great. So last
Absolutely.
question before we move on to a very interesting segment. The last question here is that we spoke about ULIPs, especially for people who are in UAE, and if
Mhm.
they want to let's say retire and
Mhm.
return home in
Mhm.
5 to 10 years. Do you think that if that plan is clear, that 5 to 10
Mhm.
years, I'm going to pack my bags and go home,
Mhm.
wherever it is ULIP a good option in that case?
Okay, so interesting question. And yes, Joe, let's be practical. Most of us, move from India to another country, or suppose say we come here, to earn more, save more, and eventually to go back to our home country and settle down there to support our families, right? So in those cases, of course, it depends on the ULIP plan you have signed up for. You have to ensure that if you are very clear about going back to your home country, say 5 years, 10 years down the line, then you need to firstly decide uh, whether you need whether okay, so if you're clear you have to go back to your home country, then in that case it does not make sense to invest in a plan which is not global, you
Hmm.
know but if you're going for a global plan, then irrespective of the country of your residency, you can keep continuing your investments.
Got it. Got it.
Right. So with whether a ULIP plan is global or not also has to be taken into consideration after seeing factors like extra entry cost, exit cost, a lot of
Hmm.
management fees associated with it. So you have to see all of these factors, but in short, if you are clear about moving back to your home country, then always go for a ULIP plan which has a global exposure so that you can continue investing in it.
Got it. Got it. I would say, I would kind of package this, the ULIP itself, as strategic investment come insurance plans, because that's what we discussed earlier. It gives you a strategic insurance angle, and then it gives you an insurance coverage along with it. So it's together.
Absolutely.
So it's more of, again, a layman term for people to understand. All right. So now there's a very interesting segment which is called myth busting. So it's fact or cap. Okay. So I'll ask you the questions, or I'll mention it to you, and all you have to say is myth, or let's say fact or cap. Okay.
All right.
So
Okay. Let's go.
yeah, if you want to explain after that, you feel free to do so. Okay. So first one,
All right.
I'll start saving once I earn more. Fact or cap?
Cap, cap, cap.
Why?
No, you can never be enough. See, it's like we think when I get rich, I will start saving or investment, but it's the
Hmm.
other way around. You start saving, you start investing, and you become rich.
Hmm. Interesting. See, that's
And
the
it's
mindset.
just it's a mindset approach. Always, whether you are earning 1,000 dirhams or 5,000 dirhams or 10,000 dirhams does not matter. You start saving even 100 dirhams or like 10 or like 1,000 dirhams. You just start somewhere and make it
True.
a habit, and wealth will compound over time.
Hmm. Okay. So next one, investing is only for those people who understand stock markets.
No way. Stock market is one aspect of the huge umbrella of investment. There's
So
so many.
definitely.
Definitely cap. Yeah.
Okay, okay. So it's not only for those who understand stock market. Okay. You need a big lump sum amount to begin investing. Fact or cap?
Cap.
Hmm.
You can
Why?
start as low as like 100 dirhams, or 1,000, like depending on your pay package, of course.
Okay, another one. Term insurance is unnecessary until you're older. Fact or cap?
Cap. Like we just discussed why it is
You
important.
mentioned that early 20s, even if you're in your early 20s, you should go for the first option
life
as
life is so uncertain, so it's a
yes,
cap.
absolutely. Absolutely. All right. Emergency funds are unnecessary because I have a credit card. Fact or cap?
Can you repeat the question again?
Yeah, emergency funds are unnecessary because I have a credit card.
No, cap, no way, that's a complete cap.
Why? But I have a credit card. I have money I can spend.
Credit card. I don't want to say this, but credit card is not a fund. It's not your savings. It's not an asset. It's
It's not
more
your
like
money.
it's not your money. It's the bank's money.
Yeah.
So yeah, it's a cap for sure.
Okay. So, when you were telling me about the option in the beginning that, oh, emergency fund ke liye, I need to save 3 months to 6 months of this. This question was there in my mind. I was thinking, but there are credit cards everywhere. We had what, 60,000 dirhams, 50,000 dirhams limit. Even with lower salaries, you get 25,000 limits,
But
and people
that's not your
generally
money. Yeah.
like, "Arey, I will swipe it. It's okay."
No.
Yeah, it's a cap.
It's a
Hmm.
complete cap. Yeah. I think all the
When
questions
should
you
we
asked were
use
like cap.
when should we use a card then?
So see, using a credit card is great, especially, given, the benefits, the reward points you accumulate, but you also have to make sure you pay it back on time.
So
Because if you
basically,
don't,
you have the enough money to afford whatever you're spending for, to pay back in that
exactly.
within that time frame, you use it.
Yeah,
Otherwise, emergency funds are absolutely necessary.
emergency fund is for like it's like a rainy day fund, Joe,
Yeah,
that you need to have it. It's not negotiable, because life, anything can happen when anytime, right? So you need to have a backup to fall upon, right? Credit card is something you have to pay for it. If you don't, the interest will keep accumulating. It will
true.
become a liability with time.
A
And
revolving
important, yeah,
amount. Yeah, absolutely.
yes,
All right, last
absolutely.
one here is a very interesting one. Savings are better than investments because it keeps my money liquid. Fact or
No, it's a cap. We discussed the first question, like savings is good, but investments are better because uh, savings is
compounds?
great, but investments is actually appreciating your capital.
Hmm. All right, interesting. Wow, this is, I'm sure, going to be eye-opening for a lot of people who are watching this, and so many of the unasked questions in my own mind got answered. Thank you for that. And well, we really want to thank you for having giving us all this time. Is there anything that you want to say in general, like a message to everyone who's watching this right now?
It was a great session for first of all, Joe, and like just one core message I want to give to everyone is that just don't overthink too much. How to start, where to start. The
Hmm,
simple mantra is start, and start now. Start small, but start and stay consistent. You know, and
absolutely
once you start, then there is no looking back. You will actually be surprised to see how exponentially your 100 dirhams, say if you keep doing it consistently, it compounds over time. So
true.
in short, just start.
Absolutely. Absolutely. Thank you so much for sharing your time and for sharing all those amazing, simple, easy to implement advice, which is going to be definitely useful for everyone who's watching this. And also, if you're watching this, please head to Policybazaar.ae, because that's where you can compare insurance plans, explore investment plans, and even look at some of those amazing savings linked policies, which you can combine with protection and growth. So protection with growth, that combo is absolutely stunning, and you need to compare to figure out which one suits you better. So until next time, spend smart, save smarter, and protect the hustle. See you soon. Thank you.
Thank you.